And let's take a look at business news with Catherine Nicholson. Thank you, Catherine, for joining us on set. How are things looking on the markets this morning?
Okay, well, we're going to start with Europe, where trade has only just opened in the last few minutes. And we've had the FTSE, the CAC 40 and the DAX in Frankfurt all opening down, as you can see. So not a great start to the day there. One stock here in France that we'll be looking at today is the advertising giant Publicis. They've reported weaker than expected growth in the second quarter, but they have said they're expecting to bounce back in the third. So we'll see what investors make of that. Moving on to how things have gone in Asia. Financials and utilities have dragged the Nikkei down in Japan. That's down 1.4%. The only stock market there that we can see is up was the Hang Seng. One sector to note, banks in South Korea, which have been coming in for some scrutiny as part of this LIBOR rate fixing scandal, which is kind of spreading now around the globe.
Catherine, you've managed to find news that is going to please Spanish bankers.
Yes, bankers in Spain should have a smile on their face today because a €100 billion bailout from the Eurozone has finally been approved. So that's all going through, which is what they want to see.
The entire sum or just a slice? The entire sum?
It's all been approved,
yes.
All been approved. And Germany is really a crucial player in this. They're picking up the tab for about a third of that amount. So German lawmakers finally voted through their section yesterday. The German finance minister said yesterday that Spain would have been okay to deal with this banking crisis on its own, but for the fact that there's this wider global financial crisis and market nervousness making things worse for Spain. However, we're not sure that the markets agree with that. The borrowing costs for Spain's 10-year government debt rose above 7% again yesterday, so indicating that people are still rather nervous about the wider state of affairs for the Spanish economy. That 7% is the danger level. People saying if that borrowing cost stays above 7% for too long, then Spain will be forced to take a wider state bailout from the European Union. So the government's trying to save where it can, voted through €65 billion worth of austerity measures yesterday. Public sector workers, the unemployed, consumers taking quite hard hits on that. Obviously, the government in Spain hoping that that's going to have the necessary effect on the economy.
Catherine, you're also following a developing story right here in France. The struggle, the crisis between the government and French car maker Peugeot Citroën, which has said it's going to lay off 8,000 workers. And the boss of Peugeot Citroën is striking back in the French papers this morning. Yeah,
that's right. We've got him here, Thierry Peugeot, on the front of the Figaro newspaper there. The counter-attack by Thierry Peugeot is the headline there. He has been speaking out. He's the chairman of the company. His family owns 25% of PSA, Peugeot Citroën. And he's saying that he's quite shocked by how the government has responded to the fact that Peugeot is laying off 8,000 workers. Well, the government would say, well, we were pretty shocked that you're laying those people off. And however, Thierry Peugeot, he thinks that the government's criticism has only served to weaken the company. He says that it could leave it open to hostile takeovers even, which of course could have much more disastrous consequences for jobs. And he said that they are prepared to accept some criticism, but that there are limits. So perhaps a little bit of animosity growing between the government and PSA now.
So he's basically arguing that it was a sound business decision, really. Staying in France, you've got proof that the economic crisis affects everybody, and that includes the president, the French president himself.
Yeah, we've just seen the revised budget voted through by French lawmakers, and it includes a 30% pay cut for President François Hollande. It's not a revolution, though. It was an election pledge by the president. Take a look at the details.
They worked through the night, but finally, the National Assembly approved the first budget bill under François Hollande. The debate alone lasted 4 days as lawmakers scrapped key planks of ex-President Nicolas Sarkozy's policies. Among them, the so-called work more to earn more rule, exempting overtime hours from payroll charges and income tax. Lawmakers also voted to raise tax levels for France's richest citizens. Their contribution was reduced under Sarkozy. The salaries of President Hollande, the Prime Minister, and other government ministers will be reduced by 30%. François Hollande will be paid €14,910 a month, down from €21,300. Just one issue remains to be cleared up: how ordinary members of Parliament's expenses are taxed. The President of the Assembly promised that a work group will soon deal with the matter.
Catherine, you have some harsh figures to tell us about for the titan of the computing world, Microsoft, which is making history but for all the wrong reasons.
Yeah, in the whole 26 years that Microsoft has been a publicly traded company, it has never yet posted a loss until now. They've posted a loss in
First loss in 26 years for Microsoft.
First loss in 26 years, yeah. It must be like the first time you fail an exam, I think. Like when I failed my driving theory when I was 17 and I was just floored. I couldn't move on from it. It's probably similar really for Microsoft. It's a big blot on the copybook.
Clearly.
I've moved on just about. Hopefully Microsoft can move on as well. They did know that this was coming as well. It wasn't a complete bolt from the blue. They told us 2 weeks ago to expect a loss when these second quarter figures came out. It's all to do with their online advertising business, where they've had to write off close to 5 billion euros of the value of that business. So this has taken their loss to around 400 million euros, and we can compare that to the same period last year when they posted a profit of over 5 billion euros. So the figures almost exactly match up there.
And you have slightly better news concerning Google.
Yes, in the computer world, there's always good news for Google, it would seem. Advertising might be Microsoft's worst enemy at the moment, but it's Google's best friend. They seem to have got better at working out what we want to search for and what to show us when we search for things. Basically, the number of clicks on the adverts that Google throws up at you when you make a search, that has gone up by 42% in just the last 3 months compared on the year before. And that's boosted their earnings by 11%. So they've changed things around in their algorithms. People are clicking on more things. They're partly thanking smartphones as well for this, people staying on the internet for longer, and perhaps, like myself, clicking on things by accident because you've got quite fat fingers.
On the touch screen, yeah, that's happened to me as well.
But it's good news for Google with the advertising revenues there, because of course that's the basis of their business.
Catherine, I didn't think you were the type, but you want to talk about beer.
I do. I'd like to talk about beer. It's just gone 9 o'clock in the morning, Paris time. Of course, with a business angle. This is about Heineken, one of Europe's biggest brewers. They've now bid to buy up a stake worth more than 3.5 billion euros in one of Asia's biggest breweries. It's called Asia Pacific Breweries, and one of their best-known brands is Tiger Beer. Now, the beer market is growing at a cracking pace in Asia at the moment. There are plenty of companies that are really jostling among themselves to try and get in on the action. Heineken already owns 42% of this company, and it wants to buy up the rest of it, basically. It's not a done deal by any means, and they are batting off competition from the likes of Thai Bev, so one to watch. It's not over yet.
Catherine Nicholson will be following this beer story for us. Thank you very much for Business News. Thank you for watching us right here on Live from Paris. I'm Cyril Vanya. We're back with more world news in 2 minutes. Bye-bye.